Hello everyone, I'm here today with my sister Kasia. I usually do these videos with Sean, but today we're switching it up a little bit, making it exciting. My sister's here with me. She owns multiple investment properties, so we're going to be talking about that. We figured that it might be useful to those of you who are looking to get into owning investment properties, what's involved. She definitely has a lot of experience from her own investments, so we're going to be talking about that today. Hello.
Hello.
You can tell we're sisters.
Yes,
we're wearing pretty much the same jacket.
Yeah.
Slightly different design.
Yeah.
It's usually how it happens. We also drive the same car.
Yes. Accidentally on purpose, by the way.
Accidentally on purpose.
Yes.
Yeah, that's a long story. Why don't we start by talking about what types of investment properties you own, where do you own them, and why you decided on that location?
So I own two multifamily properties. Each one is, one is 3-family and the other one is a 4-family. So they're fairly small. Both of them are in Haverhill, Massachusetts. And you asked why I chose Haverhill. One reason is that I try to follow the 1% rule, which means that whatever the rents that come in from each property, a monthly rent should be equal to 1% of the purchase price. So if you were to buy a property for $400,000, every month the rent should equal to something like $4,000. It's a rule of thumb. You obviously don't have to follow it exactly, but it's actually
I think a lot of investors follow that rule, and it works out pretty well.
Yeah, I think it's fairly easy to assess, and it's also fairly easy to eliminate most of the areas, because most of the market around Boston area you have to exclude because the rents are way lower than
what you're actually paying.
What you're paying for it. So it's not profitable. For example, where I used to live in Davis Square, kind of condo that I would rent, which is a 2-bedroom condo, you could probably buy it for like $800,000, maybe $1 million, and the rents were not $8,000 a month. I mean, high rents over $3,000 in the area, but nowhere near. So you just don't want to go there.
And you bought your properties for a lot less than that.
Yeah, and I bought my properties for way less than that, and they did fit that criteria. The other one is that Haverhill, if you haven't been there, it's a really charming city on the Merrimack River. It has a lively downtown. At the time, it was undergoing, in some ways, a resurgence, so a lot of people were investing there. Better policing, safer. Also, it's served by 2 MBTA stops, so it's relatively easy to get into Boston if you need to, using public transportation.
So it sounds like you got in there at the right time when it was just starting to turn around. It hadn't completely turned around yet, so property values were probably still pretty affordable, and also the interest rates were a lot lower back then than they are today. So that seems like it was a good investment from that point of view.
I lucked out, right? That I was able to invest at that time.
Yeah. What were you looking for when you were deciding to buy the properties? Location you talked a little bit about already, but maybe, as far as the condition of the buildings goes, or anything else that you paid attention to?
Yeah, so I was looking for places that I could afford, that I had a down payment for.
That's a good starting point.
Yes, exactly. That I could get a loan on. I wasn't rich, and I had just sold my primary residence, which allowed me to use the proceeds of that to invest in multifamily.
Why long-term rentals? Was there anything particularly attractive to you as an investor with long-term rentals as opposed to, let's say, short-term rentals or any other type of real estate investment?
Yeah, I was looking to invest in something that would be long-term for me, so I wasn't looking for immediate profit, high profit, and I also wasn't looking into invest too much of my own time and energy in turning over the properties, finding tenants, and so on. So I was trying to find places where the tenants would stay for a while. It would be relatively less time consuming for me to manage them, and long-term rentals definitely fit that bill for me.
So at first you were managing themselves, right?
Yes, I was managing them myself. I would say not the wisest decision, given that.
But not everybody can afford paying a management company right off the bat when they're just getting into
Yeah, and I was
Yes,
definitely
yes.
in that position. Like I ended up being probably overstretched financially, and I didn't want to spend the money on a property management company. So I was the one that the tenants called when the toilet broke or when the roof started leaking, and oftentimes that happens not when you're ready for it. So, usually Friday night, the time where things tend to break.
And you
Yeah.
didn't live in one of the units, right? Usually, when people, well, maybe not usually, but I think in some cases, when the investor is young and single, they will usually opt for living in one of the units so that they don't have to pay rent in another building or buy a house and have to pay the mortgage. It usually gets covered by the rent that you're getting from the other tenants. So I'm just wondering why you decided not to go down that route.
Partly because I was not so young anymore, and
Not so single?
and no, maybe not so single, but I think that kind of investment is a great way for a person to start. It's like your first property, and if I could, rewind my life back to where I was much younger, I would probably go that route. But given that I had already owned a single family property, and I didn't want to live in Haverhill. I mean, nothing wrong with Haverhill. I think it's wonderful, but I wanted to be closer to Boston, closer to my office, and I just couldn't afford a multifamily in Somerville. So that's why I went this route, and I think that's totally valid. I think another thing is, as you're maybe a little older, is that you don't want your tenants living with you, because if something breaks, they know exactly which door to knock on.
It's just too tempting not to knock on that door, I think, when your landlord is right there.
Yeah, exactly. So I think that puts a nice distance, and then also allowed me to eventually hire a property management company to manage them.
And you also don't own your own house.
Not anymore.
Is there a reason for that? Is there more to it than just, I don't know, you like renting better than owning?
I love renting. I'm a tenant and a landlord, so yes, which actually makes me a good tenant because I know the the pain. Yes.
So yeah, you used to own, but you no longer own your own house. Is there a reason behind that?
Yes, partly for the reasons of the 1% rule, is that where I end up living, the money, just basically the math doesn't make sense for owning. Another one is flexibility. So I like to travel, and I don't want to be tied down to one place. So that gives me definitely the option of go and live somewhere for a year, and then I decide I can go and live somewhere else for a year or a couple of years, and I'm not tied down to a property that
Or
that
a location.
I own, and a location. Yeah.